Elon Musk is about to pull off the largest initial public offering in human history, $2 trillion. $75 billion raised in a single day. SpaceX would be worth more than Boeing, Lockheed Martin, Raytheon, and Northrop Grumman combined. Worth more than the market caps of Coca-Cola, McDonald's, Disney, Nike, and Starbucks all stacked on top of each other. So if you're wondering who in their right mind is buying SpaceX at the largest valuation any company has ever asked for in public markets, well, the answer is probably you. Because within a few weeks of this IPO, your retirement account is going to be one of the biggest buyers of SpaceX stock, whether you want it to be or not, whether you've ever even thought about SpaceX or not. And that's because the financial system is quietly being rearranged right now to make exactly that happen. But first, let's talk about what you think you're buying, because most people get this part wrong. If you ask 10 random people on the street what SpaceX actually sells, most of them will say rockets. A few will say Mars stuff. Both are wrong. SpaceX is not one business. It's three businesses stacked on top of each other in a corporate trench coat, pretending to be one company. There's the good, the bad, and the genuinely ugly. Let's start with ugly. The ugly part is xAI. It's the Elon Musk AI lab that also owns Twitter. Sorry, X, same thing, new logo. A few months ago, SpaceX bought xAI in an all-stock deal that valued the combined company at $1.25 trillion, with xAI itself valued at $250 billion of that. If you're wondering how a company is allowed to acquire another company that's owned by the same guy, I have no idea, but it happened. For $250 billion, you'd expect xAI to be, a functional business, or at least one that doesn't actively bleed money. Or at the very minimum, one where the people who built it haven't all walked out of the building. None of those things are true. xAI was founded with 11 co-founders, heavyweight engineers from DeepMind, OpenAI, Google. By 2025, xAI was burning more than $1 billion a month. By March 2026, every single one of the 11 co-founders had quit. And then Elon, on his own social media platform, publicly admitted that xAI needed to be, quote, rebuilt from the foundations up, which is the polite corporate way of saying, I just spent $250 billion on something that doesn't work yet. For context, OpenAI generates about $24 billion in revenue and is valued around $850 billion. Anthropic generates over $30 billion and is valued around $400 billion. xAI generates roughly $1 billion in revenue and was just bought for $250 billion. The market is pricing xAI like it's Emirates. In reality, it's closer to Spirit Airlines. Same destination, completely different experience. Now, the rocket business, the part everyone actually pictures when they hear SpaceX, this is the one that launches things into orbit. NASA cargo, government satellites, crewed missions. The rocket business made about $4 billion in revenue last year, which sounds great until you remember the company is asking for a $2 trillion valuation. That means the rocket part of SpaceX, the part you actually think you're buying, generates revenue worth about 0.2% of the valuation. The actual rockets are a rounding error. And that brings us to the third business, the one that's quietly paying for all of this, Starlink, satellite internet from space. If you describe Starlink to a venture capitalist in 2018 as Comcast, but in low Earth orbit, they would have laughed you out of the room. Then Elon went and actually built it. There are now over 10,000 Starlink satellites in orbit, over 10 million subscribers across roughly 150 countries. In 2025, Starlink generated $11.4 billion in revenue. That's 61% of all SpaceX revenue. And Starlink's operating margins jumped from 41% 2 years ago to 63% today. The margins are not just good, they're accelerating. So when you buy SpaceX, here's what you're actually buying: a satellite internet company that prints cash, a rocket business that's solid but priced like it already colonized Mars, and an AI lab that lights $1 billion on fire every 30 days. The consolidated company lost almost $5 billion last year on $18.5 billion in revenue. That's the company about to IPO at $2 trillion. Which brings us back to the question we started with. Who is actually buying SpaceX at the highest valuation any company has ever asked for? The answer is you, and this is the part of the story nobody outside of finance is talking about. On May 1st of this year, Nasdaq quietly adopted something called the fast entry rule. With SpaceX targeting June for the IPO, the timing of this rule is what professionals call extremely convenient. Here's what changed. Nasdaq quietly altered 3 rules at once. The 3-month waiting period before joining the Nasdaq 100 index was cut to 15 trading days. The free float requirement of 10% was eliminated and buried in the technical language. A new rule that treats small floats as 3 times bigger than they actually are. Translation: Nasdaq just engineered guaranteed automatic demand from passive index funds for companies that wouldn't qualify under the old rules. They rolled out a literal red carpet, and SpaceX is the first guest invited to walk it. So here's how this actually plays out for you in plain English. If you have a 401k, if you have an IRA, if you own any S&P 500 or Nasdaq 100 index fund, within a few weeks of SpaceX going public, you are going to own a piece of it. You don't have to research it. You don't have to decide. You don't have to want it. The mechanics of passive investing will buy it for you automatically at the largest valuation any company has ever asked for. Portfolio manager George Noble said it best. Your 401k is the exit liquidity. Translation: the early SpaceX investors, the insiders, the people sitting on shares bought when SpaceX was worth a few billion, those people are about to sell. And the buyer on the other side of that trade is your retirement account. So let's revisit the question. Who is buying SpaceX at $2 trillion? Not Wall Street. Wall Street is selling. The people who got in early at a few billion are looking at the largest payday in IPO history. The buyer is the index fund in your 401k. The buyer is the IRA your spouse forgot they opened in 2019. The buyer is every American who ever clicked automatic contribution on their retirement account. You. Now look, SpaceX might be a fantastic long-term bet. Starlink is genuinely a great business. The technology is real, but you should at least understand the trade you're being entered into without your signature. Because the same passive investing system that was sold to you as the smart, low-fee, set-it-and-forget-it way to build wealth is the exact same system that just got rewired to make you a guaranteed buyer of whatever Wall Street wants to sell next. That's not investing. That's being delivered to a buyer's table. If this changed how you see your money, subscribe to Buckonomics.